Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. Now, lots to cover. We have earnings out this morning on a lot of retailers. We're going to talk about Jackson Hole and the upcoming Fed speech by Jerome Powell. And we're also going to look at some major breakdowns that occurred in the charts. And again, if you've been following along for the last week, we know things were looking like they were about to break lower. They were hitting key resistance levels, and now we have seen the beginning of a breakdown. The big question will be, how big of a breakdown is it? Is it just a minor correction, or is it a major correction? All right, let's get right into it. So as always, folks, we get right into the data. I don't like to waste much time. I have to be on my trading room in just about 30 minutes or so. So without delay, let's get right into the S&P futures chart. Now, the S&P futures chart, this is always how I ground myself for the day. I look at the markets and say, okay, yesterday we had this great drop in the S&P. The NASDAQ fell even more dramatically, down about 1.4%. But what is happening today? Are we seeing a continuation on the sell-off? And what we can see here, this is where the S&P closed yesterday. When the stock market closed at 4 p.m. Eastern time, we are trading just fractionally lower on the S&P. Now, again, we did get some retail earnings. We'll look at that in just a little bit. We'll take a look at trading levels on those things as well. Now, if we flip over to the daily chart on the S&P 500, this is what had me kind of on high alert. Right? So we had that low in October 2023 through August of 2024. Basically, the trend was going smoothly until the Liberation Day subsequent sell-off. And then look at how we've come back to the scene of the crime. And for those of you that are new to technical analysis, this is one of my favorite plays. When you have a trend line and you stay above it, okay, that's fine. You use it as support. Once it breaks, you look for retraces and short those retraces or sell into them. And that is, again, exactly what we've experienced right here. Now, the big thing is, and this is something that we don't know yet, but we don't know, is this going to turn into a much bigger sell-off or just a minimal sell-off? And again, little things like this will just continue to monitor. And we monitor them not by just looking at the down moves, but actually looking at the key trend line levels. So, for instance, on the S&P 500, there's a very keen trend line that I am watching now. So if we look at this, look, the low here from May 2025, late May, to this year's late June to early August. In fact, this was the 1st of August when we got that non-farm payrolls report. And as we can see, these levels match perfectly to their lows, and we can create a trend line. And so basically what I would tell you is that, yes, we are against resistance up here, and the markets are falling. And we saw this yesterday. We saw this basically this week. But we have to see what happens when we get to around 63.30 on the S&P 500. That will be another hit of this trend line here, the fourth hit. Now, what we know in technical analysis is that every time we hit a trend line, it weakens slightly. Okay, 1, 2, 3, and this would be 4. I've told you this before, but what are the probabilities of a break on the fourth hit of a trend line? And the answer is it's 50-50. So it's basically a crapshoot. What we know is that if it bounces there and then hits again, the odds start to favor more and more with each subsequent hit a breakdown of that line. So in theory, we could stay within these two lines, but the more we hit on the lower trend line, the more likely eventually we break to the downside. All right, so really key data here and understanding of the charts. Now, a lot of people would say, okay, well, what about that upsloping trend line, right? Because again, number one, we hit right here, and then we broke. Does it work the same way? And the answer is it doesn't work the same way on upsloping trend lines when price is hitting underneath, because price is getting more and more extended as it goes higher, because again, it's a new high each time. And so it doesn't have the same breakdown principles or breakout principles as it does on this. And this is all stuff I cover in the Winning Trader series, which again, I hope some of you guys will be able to take at some point in the future, because the enlightenment is incredible. The light bulb that goes on will change your financial future, increasing your probability of being exceptionally well off down the line. All right, so on to the QQQ, the NASDAQ 100. here we have a chart of the NASDAQ 100 and the parallel that we are in. In parallels, we trust here, guys, and parallels are one of my favorite tactics in simple technical analysis. We can very clearly see the low trend line here from May to, again, June to August 1st, basically matching the trend line hits of the S&P. And here we are looking to open lower on the NASDAQ. Does it get down there today? I actually think it will. I do think it will. Again, there's no guarantees on that. But then if it gets there, watch to see. And this will be the trigger for whether or not we get a big correction of, let's say, 10%, or if it's only going to be a minimal correction from the all-time highs, which would be down to this line, it would be about 3 and change percent. If we break this trend line on the QQQ, that's around 563.50, then you're talking about a much bigger corrective move that, in my opinion, could come all the way down to about 536 on the NASDAQ 100 QQQ. So again, very important to monitor this level. All right. Now, again, speaking of levels, I gave you guys the heads up that we were going to be getting to a point where we were watching Nvidia for when it broke its upsloping trend line. And what I say to you guys in the last week, I said, guys, this trend line, if it breaks or when it breaks, that will be the time we get a bigger pullback in the markets. And lo and behold, a couple days ago, it broke. And then we saw Nvidia start to collapse yesterday, down about $5 to $6. And so I do want to get into these charts and get levels for you guys. So let's do it right now. All right, so right into the charts we go here, guys. Let's take a look at Nvidia, and this is the Nvidia upsloping trend line that I've talked about for quite a while from the April 7th lows. Notice again, you've hit 1, 2, 3, 4, 5, 6, and lo and behold, on the 7th, which by the way is a time count if you know the methodology, that did break. And look, we opened below it here on last Thursday, and they rescued it. Then on Friday, we closed below it, right? And that was it. Now, we did get a bounce on Monday. They tried their best to recapture, but the line is upsloping. It's too steep. They couldn't do it. And then the towel gets thrown in and the sellers come in. So again, really important. We talked about how this would be where the markets start to have those sell-offs like we saw yesterday and potentially in the future here. And I do think Nvidia is going to go lower. Now, it's going to have some bounces, and they do have earnings next week. But again, look for further downside. The first level I'll be watching today, there's a small level right here at gap fill on Nvidia. I'm trying to get the line as exact as possible. Right here at 173.60. High pivot and gap fill. And that will be the first level I watch. If it breaks that level, you're likely headed to this secondary level of gap fill at 167. We can extend it back to this pivot high right there as well. So those are your two levels. This first one I may decide to day trade today. This one I would definitely be a day trader on as well. I don't necessarily expect this one to hit though today. That would be a very sizable drop on Palantir. And don't forget, guys, Palantir reports earnings. I believe it's next Thursday after the bell. Don't quote me on that. It is next week. But again, next week, Nvidia reports earnings after the bell. All right, next up, let's take a look here, guys, at a couple other key charts. Taking a look at the Palantir chart. What a drop, down about 10% yesterday. The stock is trading lower again today. Notice the upsloping trend line, high pivot, and high pivot all along here. And then we came all the way up, tagged it again, and that was it. And now we've come down. And again, we're now actually approaching 20% correction. Actually, not quite 20%, I believe. Let me do a measurement on that. But if we take the previous high, yeah, it's about 17%. So if we dump out, there is potential for more downside. But for a trading opportunities, I am starting to eye a couple levels. Take a look at this trend line right here, guys. Trend line today is right at the 150 Pierce. And there's also this former level right here at just below that. So 150 to 148, this would be a level today that I will be queuing into in terms of trading and looking for a bounce. Now, I want to be clear. I don't necessarily believe this will be a great swing trade level. The stock itself is still extremely overbought, but I would think that we would get some sort of bounce between 150 Pierce down to 148. Again, two trend lines converging right there, we should get some sort of bounce. What type of bounce could you expect there? I would think $5 to $10 would be very reasonable, which is percentage-wise a very, very good short-term trade. But again, needless to say, we always have to monitor the downside. In case it breaks, we have to use stops, all right? All right, now we're going to go on to stocks that reported earnings here this morning. Target is taking a beating. This is too bad for Target. So Target, again, missed on earnings. They beat on revenue. But I think one of the kickers here on Target is that the COO was promoted to CEO, and the CEO that's currently there is basically retiring or moving on. And the market, investor-wise, Target struggled for a long time. They wanted fresh blood in that CEO position, not someone that was basically there all along in just an under role from the CEO as the COO. And I think that's part of it. So number one, yes, they did miss, but also the fact that that CEO position is being filled by someone in the company. I think that's upsetting some investors and saying, hey, listen, I'm not going to stick around if this is going to be the way they run the ship here and not trying to make major changes. All right, so where do we trade this thing, guys? So as we see a fall, there's a very obvious double bottom down here at 87.50. That is going to be my first trading level. Again, it's about $6 away. Now, you might say, wow, $6 is a lot. It's actually not a lot in this environment we are in. We've seen retailers get down 20, 30%. Not that Target's going to do that, but my point is it could easily go there. And plus, I want to take a chart level that is an 80%, 75% chance of a win. I'm not going to take a arbitrary one that has a much lower risk of success. Now, in terms of a swing trade, where would I be looking to buy Target on a swing trade? I will show you here. I'm going to take the low from 09, the financial crisis low, connect it through 2017's low right here. That's our lowest trend line that we can find. And we basically bring a trend line there. So again, by the way, what type of pattern is this? Just a quick quiz. You guys know I love to quiz you guys because I think it helps you learn. Down move, inside bar. What type of pattern is that? You guys should all, if you've watched even a month of game plans or even 2 weeks, you should know that pattern. That is a bear flag or in spirit of bear flag. What's the probability outcome on that? It favors downside. And what are we seeing today? We're seeing downside. So the bear flag was there. Earnings disappointed. Obviously, everything they've done disappointed. And now you're looking at possibly a move down for a swing trade at around $75 a share. I do think there's value there. It's just, again, it probably goes significantly lower. Think about it like this, too. The stock market remains pretty much near all-time highs. Imagine if the stock market just has a 10% pullback. Where is Target at that point? Or what if the U.S. economy continues to slow and consumers start pulling back? I mean, this is where Target is right now, basically at multi-year lows. There's obviously downside if the market comes down. In general, weak stocks will get weaker when a bear market hits. It's just the nature of the beast, unless they're defensive like a Pfizer or a Merck or something like that. All right, let's go into a couple other charts here. We have earnings from Lazy Boy today. What a drop there. It is rebounding a little bit, but again, still a mammoth drop on Lazy Boy. If we zoom out, we can see where this thing is trading. Again, it was trading near $30 or below. My only level for me today for a trade, and I don't have a swing trade on this one, just a day trade, is $28. So you can see these pivot lows right here. Beautiful little level there. So $28 a share would be where I would start eyeing it for a day trade. Estee Lauder reported earnings, a flushed initially, now rebounding. Although, again, it is still negative. It is not down enough to get my attention for a trade, so I'm not going to waste your time with this. Lowe's getting a small pop on earnings. Their earnings were pretty solid overall, but again, same thing. The stock closed yesterday around 256.5. It's only at 263. That is not a big move. One of the things, if you're a trader, a day trader, right, you do not want to, and this is something I've learned the hard way, folks. I always try to reveal the stuff that I've struggled with early in my career. You don't want to focus in on things that aren't moving, because what we as day traders look for when we're counter trend trading, right? So something collapses into support. We want to see such a big drop that emotion has taken over by majority of investors. And so they're basically throwing the baby out with the bathwater and panicking. And what we know is that at a certain point, the panic gets overly done. When it hits that support level, then you should see buyers emerge. And usually the panic is worst at the lows. Think about it, the lows of COVID, right? The COVID collapse. And then look at the run we had. Look at 2009. Markets were in panic mode. And then look at the run we've had since then. And so the idea is you don't want to focus on something that's up or down a couple percentage points in general, because you're not going to get the fear that creates opportunity, fear or greed, by the way, both ways, that creates opportunity for a day trader. Really important to understand that. So, like, for instance, in our day trading room, we always tell people, hey, don't bring a chart to my attention unless it's a big move for that stock. Now, big moves are different from different stocks. A big move on Apple's 5%. A big move on, Lazy Boys 20%, right? And so it has to be relative to that stock. What's a big move for that stock? And then there's opportunity there. All right, back to the charts we go, guys. TJX is popping on earnings here, so nice little move on this one. This is one of the few retailers to really be up significantly this morning. I do have a trend line that I am eyeing. In fact, we're basically into this one. Look at this trend line up here, guys. So again, nice little trend line. If we bring this down and extend it out, right there, we're basically into a shortable level here around 141. Again, it is risky. So again, I would do a small position. If I'm going to do this in the trading room, I'll reevaluate it when I get into the market there. But really, we should see some good resistance based off this trend line here, right around 141 to 142. And that's currently where it's trading. You can see it's trading a little bit lower. It's actually starting to pull back now just a tiny bit. All right. And we got to get over to crypto. Let's go over to crypto, guys, because I gave you guys the thing to watch on this for a drop. We got a close below the trend line a couple days ago right there. Let me zoom in a little bit more. There we go. So on Monday, we closed below the trend line. This was a trend line I alerted to you guys late last week to monitor. Once we closed below, look, the floodgates open. Now, listen, Bitcoin is getting a bounce here, as it should. In all fairness, you're getting very close to this little pivot low. But again, Bitcoin with this break, this is the uptrend from April. So just like Nvidia, this has now broken the uptrend from April, and that means it is now more vulnerable. It doesn't guarantee downside. Nothing is a guarantee in this game, as we know, but probability-wise, it wouldn't shock me to see a rally now back to the underbelly of that level, and then a rejection and another move to the downside. All right, now where would be our next big support? So I do have a support level I will keep an eye on here. This downsloping trend line right in this range. You can see high pivot to kind of kissed here, right through here before the breakout. That would be around the 106 level. I also think 110 is an area too where there'll be support. So again, I'll kind of keep you guys up to date each day as we go through this. We got to talk about Ethereum, guys, or ETH. ETH, look at this, guys. Did I give you this level or did I give you this level? We talked about how this trend line was a major point. Price broke out. It confirmed. Didn't quite get to double top. That's okay. But what does that tell us about a retrace to this level? Would this be a buyable level here? Technically, yeah. Now, again, I'm not going to pretend to know how big of a bounce we're going to get here. But this is the methodology that I preach, is that once you confirm above one of these levels, then when it retraces to that level, this is major support now. Major support. Now, again, major support just tells us we're going to get some sort of bounce, whether it goes back to 4,800 or 5,000 or wherever, we don't know. But the idea is that this was going to be major support. Lo and behold, it literally went right there yesterday, and we're getting a bounce. Very cool stuff. And again, I love showcasing this because it reiterates how a lot of investors, guys, a lot of us, including myself early in my career, I relied on, and by the way, early in my career, there was no social media. So I couldn't rely on social media, which was actually probably good because social media is the king of emotion, right? If you want to see where emotion is, go on social media, right? The thing is, can you withstand it? Can you be immune to it? That's what you got to be. Don't let people hype you up or FOMO or FUD you out, right? Using some crypto terms there. But the idea is, again, that is the craziness. Now, for me, there was still mainstream media and print media and stuff like that early in my career. And so that still had a narrative, right? You still had analysts upgrading stocks at all-time highs, which would generally be like, oh, man, this must be going higher. And then all of a sudden I would be like, wait a minute, this analyst upgraded this stock at all-time highs, and that was the top? That's weird. And I started to put the pieces of the puzzle together that when an analyst upgrades it, they're no better than you or me with emotion, and they're just playing catch up, right? And oftentimes that can be a signal of a top. All right, neither here nor there. But the point being is, be very careful. You got to avoid emotion. That's how you're going to be the best trader you can be. All right, so Ethereum or ETH, we looked at that. Let's go to gold here real quick. Let's flip through gold here. And on gold, folks, what we're seeing here is A little bit of a bounce today, nothing too crazy there. Remember, gold probably won't move much until we get the Federal Reserve Jerome Powell speech on Friday, and then I'll be looking for a bigger move. Same thing, by the way, with the dollar. The dollar's down slightly, but again, look at the dollar over the last 5 days. Almost no movement because, again, we're waiting on Jerome Powell. 10-year yield, kind of the same thing. You had this little blip, and then the last few days it's gone to sleep because, again, everything in this market is now hinging on that speech by Jerome Powell. But back to gold, little bounce today. I would still have a slight negative bias on gold for additional downside. Silver yesterday cratered. Now it's getting a small bounce. That wasn't that big of a sell-off yesterday, I guess, but it still remains resistance and support levels. It's in between both of these. So there's nothing for me to do here. I just have to sit on my hands. As much as I'd love to trade silver, sit on my hands and wait patiently. And then oil continues to hold above the $60.65 gap fill support, but not by much. One good sell should get there. Then we'll see how price reacts. And then lastly, natural gas, folks. And again, sorry to kind of buzz through these, but I do have to get to my trading room. Natural gas is trading flattish on the day. Great rejection yesterday. Dropped, retraced to the scene of the crime, kind of what we were just talking about could happen on Bitcoin. And then it breaks to the downside here. Again, downside support remains at this area in the near term at 262 to 263. That would be that level to watch. All right, so that's kind of where we are at this point. So again, guys, when all is said and done, the markets, again, we've started to see key breakdowns. Now, as I showed on the S&P and the NASDAQ, we haven't broken the next trend lines yet. So we don't know if this is just a 3% correction, 4% correction, or a 10% or greater correction. The trend lines, and if they break, will tell us that. Concerns that I have: Nvidia broke that line. Bitcoin broke that line. I mean, these are assets that are trillion, multi-trillion dollar assets. They've broken some key levels. And so I do think the market is more vulnerable right now than it has been since the April lows. So keep that in mind. But overall, folks, as always, verified investing is no BS, just charts and probabilities so that you avoid that emotion. Again, go to social media, like I said, if you want that kind of stuff. I try to stay off of it unless I'm using it as a contrarian indicator. And again, I think that's the way to use it if you're going to use it. Go have a great rest of your day. May it be profitable from us to you. Thank you so much for tuning in to the game plan or my trading game plan. I'll see you tomorrow morning. Take care.